Good morning, everyone, and welcome to Morning Markets from the team at True Prudential. Today, we'll focus in on November, a very historic month for equity markets and asset market returns in general. So the month of November brought us 3 Mondays with 3 good news stories. Each of those Mondays with a new vaccine from Pfizer, then from Moderna, and then from the AstraZeneca Oxford study, each of which showed efficacy rates or success rates probably better than most participants had been expecting. And this saw uncertainty removed in terms of how to deal with COVID-19. In addition to that, we had the US presidential election, which, if we remember back to some of our discussions then, we talked about the uncertainty that was creating in markets, and that's now been dissipated to a large extent as well. And that has allowed for quite a material rotation within equity markets, but more generally, a strong performance from equity markets over the course of the month, and indeed double-digit returns and returns at some levels in markets that haven't been seen historically on a monthly basis. So just to put some context around that, if we look across Europe, we saw the German DAX gaining about 15% in the month. We look at France gained some 20%, the UK FTSE 100, 12%. Very strong returns for the month. A very similar picture as well across the globe. So just looking at the US, we saw the S&P 500 up about 11%, the Nasdaq 11.8%. Within the US, the key standout equity market performer was the small cap index, which saw the Russell 2000 gain some 18% in the month. As we've discussed in the past, small cap very much focused on the economically sensitive and the domestic recovery within the US economy. But also, even in Asia, a very similar picture. We saw the Nikkei 225 in Japan up some 16% on the month. The Hang Seng in Hong Kong up 10.7%. So just all indicating the strength that we saw in equity markets. And also worth noting how, I suppose, developed non-US markets, so the likes of the UK, France, Germany, etc., all outperformed the US market in the course of the month. I think one of the key things keen to really stress is that whilst at a headline level, returns are strong and indeed very strong, even if we dig into that and look below the index level, what can we see there? And we can see a degree of rotation. So some of the more economically sensitive sectors like financials, industrials, energy, all performing significantly stronger than those broad indices. If we look just at the US, we can look at a banks index there. It gained some 17% in the month. The industrial segment of the Nasdaq up about 14%, and very strong returns from financial stocks across Europe and the UK as well. So real indication of rotation within equity markets. In bond markets, it was quite an interesting month there, where we saw initially on that news the yields moving out, so bond prices falling. We discussed how the US Treasury 10-year got very close to a 1% yield. But then over the course of the month, the bond market slightly more sanguine, reflecting the ongoing challenges that we have from COVID-19 infection rates, some deterioration in economic activity and economic momentum. We saw yields then come back in. So if we look at the US, for example, the US 10-year is probably little changed over the course of the month. Today yielding around 83, 84 basis points, very similar levels to where it started the month. In terms of UK gilts and other European sovereigns, we did see them back up slightly more than the cases in the US. So the 10-year gilt in the UK is out at 31 basis points today from 26, etc. So small falls there. Currencies, very much about dollar weakness over the course of the month, where the dollar weakened about 2.5% against the basket. We've touched on these sessions around the strength that we've seen in sterling, and we also saw quite material strength in emerging market currencies, and particularly those currencies that are tied to economically sensitive areas such as oil exports, iron ore exports, where they did have a very strong performance relative to the dollar over the course of the month. That played out. We saw oil prices, if we look at Brent, we saw Brent up over 20% in the month. We saw copper 12%, iron ore some 11%. The other side of that, the more defensive gold and silver falling about 5% over the course of the month. Just then, looking at yesterday, I just wanted to touch on two stories overnight. One, we mentioned yesterday the National Bureau of Statistics, the PMI data from China. We've the private Caixin survey coming out today on manufacturing, and it tells a very similar story of ongoing improvement in manufacturing in China, with the survey moving from 53.6 to 54.9 for this month. And across most of the subcategories, we were seeing expansion there. So again, speaking to domestic manufacturing recovery, but also a recovery in global trade. And again, that's evident in two other data points from Asia overnight, both the Japanese PMI, which is inching very, very close to 50, showing improvement, and South Korea showing improvement and staying within the expansionary above 50 territory. Two economies that are very much linked to manufacturing and global trade, and showing that recovery that we're seeing in data points there. That's it for today. Please do subscribe on YouTube, and I look forward to again seeing you tomorrow. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.